So you want to work in big tech companies like Google and Facebook, or create your own startup like Airbnb and Instagram? OmniQuotient is here to help. OmniQuotient is an online learning platform where you can learn something new from prominent developers every day while creating meaningful connections with them. Just go to omniquotient.com. Follow the topics that you want to learn and the developers you want to learn from. Share your tips and tricks in coding and interact with other developers. Join the OmniQuotient community today.
What I've seen that hinders a lot of people in general is they believe that doing their job well actually gets them promoted.
So how would you demystify AI for a 10-year-old?
It's actually harder to explain AI to an older person. Hi, welcome to CTOsDiscuss. Hello. Good evening. Hi.
Good evening, everyone. Hello, welcome back. Welcome, everyone.
Welcome back. I see, Jerv, you have this very cool lighting behind you.
Oh, yeah, something new from this week's delivery.
Nice. Looking good,
Ganun
man.
din ba
Looking
kayo,
good.
guys? And the pandemic, napapa-order kayo lagi? Has it been like, is it retail therapy for you guys always?
Yeah, actually, the challenge actually is when you're in a meeting, in a video call, and then Lazada or
Oh,
Shopee
yes,
like,
bro.
says like they're outside or something, and then you gotta like say how do I say that? I gotta go meet this order, right?
I'll be right back.
Yeah. BRB,
You-
2 minutes.
yes,
But
exactly.
everybody understands, at least on this side of the world, right?
For sure,
Uh,
for sure, for
yeah.
sure. Special night
Anyways,
tonight, Bert. Huh?
yeah, special night tonight. Welcome back, everybody. Thank you for joining us on this episode. Overall, we're doing this series on blockchain. We talk about
Yes.
everything around blockchain, but tonight's episode we are going to be talking about something that I think is like a unique corner of the blockchain topic. This is
Yeah.
about decentralized finance, and I am very excited to talk about this because I am actually a big newbie on this topic. And so I have so many questions to ask our special guest today. And if you have any questions, feel free to ask them in the comments, and we will try to relay them to our special guest to also answer those. So thank you for joining us.
Yes.
Jerb, would you go ahead and introduce our special guest tonight?
Yeah, for sure, for sure. You guys have probably seen his profile on our page, right? When we posted it, but this
Mhm.
guy's been around on in the industry for like 7 years already. So pioneer, if you can probably say that. And he has built blockchain projects and products across clients like big names like Bank of America,
Mm.
Citibank, Union Bank of the Philippines, and even the Singapore government. So this guy's an expert, right? He was actually part of the local team of Consensus. So if you guys don't know about Consensus, a lot of the names behind Consensus are also the ones behind Ethereum, right? So
Wow.
Ethereum is one of the biggest blockchains right now, and we're so happy to actually have Chris with us tonight. So Chris is currently the CTO and co-founder of HaloDAO, where he has raised $4 million in funding. All right, so
Wow.
very good guest tonight, guys. An expert again. And as Albert mentioned earlier, if you guys have any questions, please don't be shy to put them on the comment section. Lagay niyo lang dyan. We'll do our best to read them, and then Chris will for sure do his best as well to answer. So, welcome to the show, Chris, podcast episode.
Hi,
Hello,
Chris.
hello.
Hey everyone. Hey Jerb. Hey Albert. Thanks for having me on.
Yeah,
Right.
yeah.
Go ahead,
Thanks
Bert.
so much, Chris, for joining us. Yeah, let's hit it off right away. Jerb gave his like intro of you, like that's the profile, that's the LinkedIn, that's the bio that everybody
Yeah.
reads. Tell
Yeah.
us like how you usually introduce yourself. Talk about what you're doing. Maybe you could also elaborate about what this Halo DAO is, and
Mm,
just tell us, man.
Yeah, sure. Okay, I probably should have phrased this a bit better, written it down. But I guess just
Don't worry.
really like casually. I just like to say that we're trying to build sort of like BitTorrent for money. Because like Bitcoin was that initial like sort of like attempt at that, right? And it did really, really well. So everyone knows about Bitcoin now, right? You don't need to explain it, and it's like you can send money to and from anyone, anywhere in the world. So I guess that's what we're trying to do now. Well, that's as HaloDAO, right? If I were to introduce myself, I'm an engineer by training, but generally I just like to build things that people use. So I think this is going to be useful. I think it's really, really great that anyone without a bank account or without a minimum balance can, or without being like, accredited investor, can take part in like, global finance and use the same tools that anyone else can. So I'll stop there though. So, but
I
we'll
mean,
get in there
you
as
want
we
to
go.
stop there, but I kind of like want to keep going. I have so
Okay.
many questions in my head. Like, what do
Yeah.
you mean when you say like BitTorrent for money? Like, I have a million
Yeah,
questions there.
Albert's head was like working there when you mentioned that. I was like,
Yeah, like
Yeah.
what the
Yeah.
heck is a BitTorrent for money? Like that's sounds like a cool analogy, but I have like three gaps I think in front of me.
Okay, that means it was a bad analogy then on my part. I guess what I'm trying to say is, what like what we call like the Web 2.0, right? And I'm using more blockchain terms now. What the Web 2.0 did is it brought Google, Facebook, etc., all these big companies that that we now sort of live 2D lives on our screen. Then it brought fintech, as we know it, like I don't know, Gcash or PayMaya for Philippine context, right? So now you can send money to and from your friends as long as they have that app. You can cash in, cash out. But that's super basic, right? If you wanted to sort of grow your wealth, there still aren't a lot of other options out there. I mean, sure, you can cash in and out of an e-wallet. You can send it to your friends. You can split the bill for dinner if you've used Venmo or something like that. But that's as far as it goes. What do you do as a millennial, or as anyone, as a digital native? How do you grow your wealth in a way that was not possible before, in a way that's just like easily accessible to you? Um, just by opening your phone. You couldn't really do that before, right? And now we almost can do it very easily. We can't do it easily yet, but that's something we're trying to work towards. If that helped clarify the analogy there, Albert.
So is it? I mean, okay, let me try and let's see. Tell me how wrong I am. Okay. So is this like when I think of BitTorrent, I'm thinking of like a client where you can both leech and seed, mostly leech. Seed like the torrent
leech all
files.
you can, seed nothing
Yeah.
back.
For this one, are you thinking of like is this like a node in the network of the blockchain? That's like for consumers.
Yeah, so when we're talking about nodes in the blockchain, I would classify that as like, that's like the infrastructure level, right? So
Mhm.
when people talk about Bitcoin, Ethereum, what other blockchains, Cardano, Polkadot, whatever, right? They all, have nodes that act, or validators that run the network in aggregate, and then they have this consensus algorithm. When we're talking about like finance now on the layer that's being built on top of that blockchain, it's not about nodes anymore. It's just about building apps, or having a
Okay.
UI. For the more technically minded viewers, having like a UI or a client, and then having a smart contract that sits in the back end. So that smart contract now sort of functions as a sort of like P2P coordinator, you could say, or an
Okay.
automatic coordinator, where typically it was, let's say, a Gcash or a BPI or whatever bank that was acting as that coordinator, but now
Middle, yeah.
it's just like an automated coordinator. Like you have BitTorrent coordinating between peers who are
Yes.
uploading and
Yeah.
downloading. Now we have the smart contract that's coordinating money, essentially lending and borrowing to generate yield, swapping one token for another from one person to another. Which is essentially trading
Yeah.
in whatever form. We just have that smart contract now that sits autonomously on the blockchain, if it was designed in that way. That just acts independently, and it can't really be stopped just because an entity stops business, or just because a person uh, runs out of money or something like that.
So
So
totally
all of the rules.
decentralized.
Yeah. Decentralized, automated, running completely independent of a central party is sort of what we're trying to get at, if we're talking about DeFi specifically, of course. So,
Got it. Okay, maybe let's use this as a jumping point, right? Like,
Yeah.
what is DeFi or decentralized finance, how would you explain it
Yeah.
to a
Just to
10-year
add to
old?
that, Chris, to the question,
Yeah,
is
yeah.
it because I think for the viewers, right? I think when you explained it, there's no there's no middleman or like a Gcash or BPI providing the infrastructure. Is that the definition of DeFi, or is there something more? Right? Go ahead.
Yeah. Yeah, so we're sort of getting into the weeds here, and I'll do my best to come up with a really, really good airtight explanation. But I
We can
guess
follow up. We can ask follow-up questions. Don't worry about it. Just give it a shot.
yeah, no worries, no worries. Yeah, I feel like we're gonna start bringing on all the questions, so I'll do my best to explain it as clearly as I can. But in my mind, at least, if I were to explain DeFi to anyone, I would say it's the ability to grow your wealth, no matter where you are in the world. If you want to get more technical about it, it's the ability to lend and borrow. Uh, to and from people that you've never met in your life, and you don't know who they
Mm.
are. You don't know what their background is. You don't know if you don't have to verify if they have the money or not, or can be solvent or not. You just know that if I hit the save button, I will get a return on my money that's deposited, and that's it, right? And that's what we do with banks. We trust banks to do that sort of like how do you say this, due diligence for us.
Intermediation. Yeah, yeah.
Yeah, exactly, exactly.
Yeah.
But now we don't have to. We can just trust it automatically, and we know that we're gonna get a yield up to some certain parameter or a certain level or annual percentage return or something like that. Am I getting at it? I'm not sure
Yeah,
how
yeah.
detailed we want to
I
get right
mean,
away, but yeah,
I think you're explaining it really well, but then there are like, in my mind, I'm thinking, wait, let's back this up a little, because I had assumptions when I came in and heard the
sure.
topic, right?
Yeah.
And my assumptions when I heard blockchain, heard the word decentralized there, I immediately thought cryptocurrency, right?
Yeah.
So what's the difference between cryptocurrency and decentralized finance? How do they interplay with each other? Do they interplay? Like maybe you can talk about that.
Yeah, yeah, absolutely. No, that's a good question. So, when we say cryptocurrency, at least in my understanding, it's just these are these native tokens on their native blockchain. So let's say the classic example right now is Ethereum, and Ethereum hosts all these apps, and it has its native token ETH. That's not quite decentralized finance yet, right? That's just the utility token of the Ethereum
Yeah,
network, and
parang
everyone's familiar with
infrastructure
that.
lang siya. It's like
Mm.
Yeah.
a tool. It's like a tool. Yeah.
Yeah, exactly. And on Ethereum specifically, it's like it's the fee you use to pay the network. Some people say it's gas. It's what you use to be able to run apps on Ethereum. To put it simply. Now these apps can be anything. It can be all these NFT stuff happening, artwork.
Games. Yeah.
It can be games, play to earn now. One of those applications is finance, right? I mean, it's just general programmability on the Ethereum blockchain or another smart contract platform if you want, if you prefer. And DeFi is just one of them. So they call it DeFi, but it's just another app. It's an app that someone coded, and it just acts as an intermediary, as Jerb said, between a lender and a borrower, and that's it, right? That's really all it is at its core, and that's DeFi. And then they just say it's decentralized just because it's on a decentralized blockchain. There's so many spectrums to that, so it's kind of confusing to call it decentralized finance. I mean,
Mm.
sometimes it is just centralized finance on a shared
Mm.
platform, depending on how how the foundation, quote unquote, runs it.
Yeah.
Or, but yeah, I mean, it's essentially just that. It's a financial app built on the Ethereum blockchain most of the time, and it just allows you to lend and borrow, perform any financial transaction,
Yeah.
without knowing who that other side is, and that's all, right? Now, just let me know if I'm going in circles or getting at your
No, no,
point.
this
Yeah,
is good. I think the next question that's in my mind is like, how is this different from, what value add is this from a bank, right?
yeah,
Like it seems like you're saying that this does essentially the same things as what a bank does, except decentralized. Aside, what does the fact of being decentralized? What are the kind of benefits, added benefits?
Mm.
Maybe you can talk about also risks, maybe like pros and cons over
yeah.
here.
Yeah, absolutely. And the risk is where we have a lot to talk about, right? I'm sure a lot of people heard about hacks, etc. But I guess we'll start with at least the benefits that I see, or at least that we see at HaloDAO. Um, the major benefit that I see is that you can earn all the money that the bank earns, corresponding to your capital put in, without having to pay the bank. So if for example, I don't know if people have seen that sort of like meme or illustration. I don't have a link to it where the bank takes your money, takes everyone's money, and it's just walking away with it with a big pile of cash they're carrying, and then the money or the coins that fall down, that's your interest, right? And then they just take that in their wheelbarrow and they leave, and they spend all that money somewhere else, right? That's at least what I think of when I think of the benefits of decentralized finance, where instead of the bank walking away with a wheelbarrow, not that banks are bad, right? I'm just using it as an example. Walking away with a wheelbarrow, it's you now walking away with your smaller wheelbarrow, proportionate to your capital, and it's no longer the pennies falling off that's your interest. It's the wheelbarrow now. So oversimplified, right? And just stop me anytime. But it means that you get most of the income from your capital rather than paying it to an intermediary. So that's one of the benefits I see, and I think is the most striking that most people will see if they start getting into the space, if that's getting at the question now.
Yeah. And I think just to expound, like it's not so much to antagonize the banks, really, right? It's more of because there's no middleman involved, then the cost to make a transaction happen is lesser, right? I hope you guys can, I hope naiintindihan yun. Kasi di ba, the banks, they run operations, right? They run a business, and of course, may pinapasweldo sila, di ba? Yung infrastructure, yung branches, all of those things, right? They have to pay for that, right? And so there's cost. Syempre, for them to operate their business, they have to make money, right? And to Chris's point, na yung wheelbarrow, yung mga yung mga nahuhulog na coins, those will be like probably like the interest, right? And in effect, like if you oversimplify what a bank does, right? It actually takes money from people, actually they borrow money from people who have excess money, and then in return they turn around and give that to people who need money for an interest, right? And that's their play. It's margin play, no? Ngayon, tanggalin mo si bangko, tanggalin mo yung branches, yung mga tao, yung mga tellers, all of those costs, right? That we as the end consumers would have to pay. And you interact with a code or a smart contract or this blockchain. This is why it's like you earn more. Kasi nga, there's little, like paano ba? Parang there's a smaller gap that you need to cross para, kasi wala na nga yung cost so the cost is lower. So yeah, exactly. So you take more in effect because there's no one that you pay because they have a lot of expenses.
Yeah, exactly.
Let me play devil's advocate here a little bit. No, because I think this sounds really good in principle, in theory. But the first thing that comes into my mind are like, transferring money in Ethereum or Bitcoin at the moment feels like more in transaction fees than doing it via bank.
True.
Right? So like suddenly, like in theory, it sounds good, but in practicality, what's your thoughts on that? Is this like, does the argument hold true? What's the plan here? What's the game plan?
Good question.
Yeah, no, really good point. And and of course, Jerb, you on the previous one, you're the perfect person to explain that here, being front and center into how that works. So I think you put that really well and put the direction of the conversation there. But working off that and then going to Albert's question, you're right. Yeah, so Ethereum transactions are really expensive now, right? So it's not like if you have 10 pesos, you'll want to use Ethereum to earn interest on 10 pesos, right? That doesn't make sense. But what's coming now, and maybe some people have heard about, is layer 2. And that's a lot more advanced than people think. We don't see like the Gcash, PayMaya type apps coming up yet that are built on layer 2. But essentially, quick background, layer 2 just makes it so that whenever you perform a transaction on a blockchain like Ethereum, it's almost zero transaction cost. And I mean literally almost zero. I'm not going to get into the decimal places, but on your UI, if you've used any app like MetaMask, for example, for those crypto savvy that have used it, every time you trigger a transaction, it shows as
0.00000.
Yeah, as in it doesn't even show on the UI anymore. Sometimes it's just zero. So for those who have been using layer 2, you'll know how nice that is. That you can leverage all the benefits of DeFi or permissionless blockchains without paying all those expensive transaction fees that plague Ethereum now. So what does that mean? it means you'll have the scalability of a Gcash or Paymaya without, but still having the benefits of DeFi. So it's permissionless. You can bypass, you can, use financial systems that you don't have access to, but not pay super high fees while going through that. So you can use your 10 pesos to earn that savings right now. We can get a bit more technical. Just let me know how technical we want to
Yeah,
go,
maybe
guys. But
nga, Chris. Maybe you could
yeah,
explain why is it called layer 2, right? What's layer 1? And then why is it that the fees are now lesser, right? Because you do still have to put it on the blockchain, right? And there has to be,
absolutely.
someone to process it, and that guy at the end of that node has to earn money because he's incurring costs, right? So someone has to pay Peter, right? So go ahead.
Yeah, absolutely. So this starts getting to the consensus algorithms of how all these blockchains work. But essentially, let me start again. And I like to start with very, very high level examples and then try to drill down deep. So just let me know if I'm going too high level, guys. But I like to think of so for example, let's use the example of Ethereum, right? So Ethereum is this huge trusted blockchain, and everyone's throwing their records onto it, their transactions. And that clogs up the blockchain because what happens with every node in the blockchain needs to record the same block
Right.
of data. So let's say you have 10 transactions, that's one block, right? But then every node has to record those same transactions. So
Yeah.
every node, it gets really slow. And then the bigger the block or the more data in that block, the more data each node has to duplicate as well. That gets really expensive. What layer 2 does, it's like let's say you're typing in your laptop, right? I'm jumping across analogies here. Your laptop is Ethereum. But then let's say you take your notepad that's on the side. You don't want to type the whole document right away. You want to write an outline on your notepad, and it's faster on that notepad.
Okay.
That notepad is layer 2. You're writing these things before you write the final essay. You're writing your thoughts down so that you can go through it faster, and then so you can just have these thoughts down, process it, and then put it on your main essay that's on your Microsoft Word or something like that. That notepad that you're doing your short-term thoughts on, so you can process things in bulk later on, that's layer 2. So this layer 2 takes the form now of Polygon. So there are different types of layer 2. There's a side chain,
Yeah.
which is technically a separate blockchain. And these typically have shorter block times or confirmation times.
Faster.
So Ethereum is, Ethereum is 13, 15 seconds now. Polygon, for example, as a separate side chain is, what is it? I think, is it 1 second? Do you recall the latest drip?
Parang ganun. Yeah.
Yeah, it's like that.
Thereabouts.
Then others are sub-second, right? So there's a side chains. There are different side chains. So those are like Notepad where you write different things down and then you commit it to the main blockchain later on. And they call that, finality. How soon does a transaction become final as it flows down from layer 2 all the
I
way to
feel
layer
like
1.
I feel like this is like the counterpart of clearing cutoff times in checks in banks.
Exactly. I was about to say, parang syempre you don't want to clog, right? So for example, let's put this into an analogy. You have one guy processing millions of transactions. So isang tao, and most, like maybe in banks this happens, right? Like there's this operations person, he handles 10,000 transactions, right? And so his queue gets clogged, right? So what happens actually is what we're doing is instead that we write the transactions real time to the blockchain and parang na overload, we actually put them by batches. So yun yung sinasabi ni Chris kanina, no? Now we put them on a notepad, and then once we're final about the entries, then we put it by batch. And so that lessens the kumbaga sa traditional, the API calls to the server. Kasi it's batched eh. Yeah. So tama yung naisip mo na analogy. Yeah.
Yeah, exactly.
Clearing cutoff times in checks. The check is valid. They'll process it. It's good as it reflects in your balance, but it's not yet in your available balance. Right? So it's kind of like that. Interesting. Very interesting.
Yeah, exactly.
Yeah. I'm wondering, like, maybe because I'm coming from a very like I didn't know about this part of blockchain, honestly speaking. So are there any apps out there right now where people can use that are under this decentralized finance category? Like what are things that we can actually use right now? What's the practical uses?
Yeah. Well, I mean, my favorite. Okay, so let me group them into two categories. So there, in blockchain lingo, we have non-custodial and custodial. Custodial you could say that's like Gcash, that's like Paymaya. They hold your funds for you, and then you just have a UI that communicates, via API request that sends instructions like transfer my
Yeah.
funds, move it here, whatever.
Bitcoins.
Okay.
Yeah.
Yeah. And like CoinsPH, that's custodial. Cryptocurrency exchanges, so Binance, that's custodial. So that's custodial. They hold your funds for you, then you just send instructions via the UI. Non-custodial is there's still UI, of course. It still accepts instructions from you, but it doesn't go through someone else holding your funds anymore. Your funds are in your wallet, and you communicate direct with the blockchain. In a more technical basis, your wallet, your keys are stored in your phone or your device because it's non-custodial. You hold custody of your keys now.
Or your
Uh,
browser.
yeah, exactly. And then that just communicates straight with the blockchain, and no one tampers with your transaction request midway. So even if they intercept your transaction, like man in the middle, they can't tamper with the instruction you're sending to the smart contract on the blockchain now, because that's secured and encrypted with your keys that you hold. So examples of that are, my favorite one's Argent right now. I wouldn't say it's like the best.
Sorry, what was that?
best. Argent.
Spell it
So
out
okay.
for the
A-
viewers.
yeah. So do we have a chat window that I can drop it in?
Private
I-
chat, and then
yeah,
I think
yeah.
sila Lenly can put it on the.
Got it. Well, it's just
Yeah.
argent.xyz. I'm just going to drop in the chat window I see here.
Sure,
Let me
There you
thank
go.
guys. Yeah, so argent.xyz for anyone who might be listening live. That is a complete non-custodial wallet that you can use to interact with pretty much any DeFi protocol that's exposed in the UI. So it's not everything yet, right? But most of the DeFi protocols there are the ones that people use a lot. And you can just use that. You have to pay transaction fees because it's non-custodial. No one's going to pay that fee for you and intercept your transaction. So that's what comes with it. What are some other ones? There are also centralized DeFi apps like Celsius is one.
Okay.
Custodial DeFi apps. Celsius is one, and that's to get a yield on the cryptocurrency you deposit. So there's a whole bunch of spectrums to this, right? But that's where I would classify most of them. It's either you hold your keys or you don't. So different purposes, but yeah.
You mentioned like growing your wealth. Are they like giving loans? Like, are there any on the blockchain right now? Like, are there
Yeah.
any apps like that right now?
Yeah, and I'll drop links again just as we go. The most popular one, the sort of one that started the whole this decentralized finance sort of movement was Compound.finance, or at least one of them. I'm dropping it. I dropped it in the chat as well now. So Compound just listed some initial like stable coins like DAI, USDT, and then of course crypto like ETH and Bitcoin, WBTC, or it's a Bitcoin equivalent. It just allowed you to lend after posting collateral. So it's a collateralized lending protocol. And
What do
anyone can go
you
there
put
now.
as collateral?
Yeah. So typically, when you borrow from a bank, you borrow without. Well, I mean, and you feel free to jump in anytime, Jerv, if I'm describing this wrong. But when you borrow from
No,
a
go
bank,
ahead.
yeah, when you borrow from a bank, typically, let's say, okay, what's the easiest example? Spending with your credit card, right? That's taking a loan from a bank, right? You just swipe it, and they say, okay, this is under your credit limit. You can buy this, and we'll pay for it now, and then you pay us later. That's unsecured lending, right? With Compound.finance and a lot of crypto lending protocols, it's what we refer to as collateralized lending, or you could say secured lending, maybe. It means that you post Bitcoin, Ethereum, or whatever crypto as collateral. And if you want to take a loan, you can only take a loan up to, let's say, a set percentage of that collateral. So 80% of the value of that collateral you can loan. And if and that protects against
Can
the
you give an
protocol becoming
example of
insolvent.
like what you can collateralize? Like, is it like your house? Like, is that
Yeah. Yeah. Good question. So you collateralize cryptocurrencies like Bitcoin or Ethereum, and then you try to borrow, let's say, 80% of that value in stable coins like USDC, USDT, dollar peg stable coins at the moment. So if I have $100 worth of Bitcoin on Compound at least, and I stake it there, never mind about the price fluctuations right now. Let's talk about that later. But if I have $100 of Bitcoin there, I can borrow up to $80 of DAI or USDC, dollar peg stablecoin. So I now have that. Now I have my Bitcoin just there, and I can redeem it, but I have the spending power now. So the idea there is that if I have a bunch of crypto and I don't want to sell it right now because it's going to go up, I can stake it there and then borrow up to a certain limit of stable coins. And then later on, so as time goes by, I'm going to pay interest on those stable coins. And then I can't claim my collateral until I pay off that interest and the amount I actually borrowed. After I do pay that back and pay the interest, then I can get my collateral back, which is my Bitcoin or Ethereum.
Yeah.
So that's collateralized lending there. The initial use case there is just that for a bunch of early crypto investors, if you want to extract spending power now and you have to pay a bill, you don't have to sell your crypto.
Right.
So the
Just
idea
so
is
to
hopefully it
provide
goes up. But yeah.
Yeah. An analogy in the, I mean, they took this from the, like how banks also do it, right? Like for example, as Chris mentioned earlier, uncollateralized lending, meaning it's a clean loan, meaning wala kang collateral. You don't go to the bank and say, hey, I have a house and you can
Yeah.
use my house as a collateral just in case hindi ako makabayad, right? So what that actually does is that it provides the bank a little bit of comfort na, hey, to lend you money because if you don't pay up, I can take control of your house. No? So in similar manner, the smart contract in this case holds those crypto for you. So yun yung collateral mo in a sense. No? So there.
Yeah.
Now,
This
question, Chris. Like when who's the other party though? So you're the one borrowing, and who's the other party? Yeah. So
Yeah.
who's lending you money? Is it the smart contract? Robot ba yan? Sino yan?
Yeah, good question. Technically, it's a smart contract because everyone pools their funds. So if I lend money, I'm lending money to the smart contract. I just press a money like lend. Because I lend money to the smart contract, that smart contract will then lend it out in turn to someone else if they borrow, and then you will earn that interest fee that they're paying, that real-time interest fee. Now, the really cool thing about this, if that answered your question there, Jerb, the really cool thing about this is that this interest fee that you're being paid for lending, it happens every block. So technically every 13, 15 seconds, you're getting your interest fee. So this is really nice because it's like real-time finance. And it's not something you have to wait a cutoff for or 15, 30 days. It just happens right away. So you're literally streaming money, which is a nice thing about it. So yeah.
very interesting.
So that's where I get the BitTorrent kind of thing as well. So if you're streaming
Got it.
videos or you're downloading videos, now you're streaming money.
Yeah, my brain cells are rearranging. Like just how mature is this? Is this like a
Good
playground
question.
thing? Is this like the wild west, or is this something that you
No.
could recommend your parents like get involved in, like commit or something? Where are we in the spectrum right now?
Good
What
question.
what you said, yeah, very very good question. It's wild west. I mean, there isn't even insurance for this. So if you're asking me, would I tell my mom to put her retirement her retirement funds in this? I'm like, no, don't do that. Keep it in the bank where you earn your 0.001. Because it's more likely, because if you don't know how to actively manage this and you're not in the space, you might lose it, right? You don't understand the risk, and there's a lot of them. So number one, if I were to try and categorize, number one, I would say the blockchain itself. How long has Ethereum been around? It was launched 2014, was it? It's
14,
2021.
15.
Not
Yeah.
not more than 10
Yeah.
years.
Not even 10 years, right? So that in itself is a problem. Number two, the smart contracts themselves. If we're going through the technical risks, the smart contracts themselves, that was written by some person you may or may not know. You don't know if all the logic has been. I mean, if we have human coders, we have mistakes, right?
Error. Yeah.
Yeah. There's bugs in there, and this time the bugs affect your money. And
So this is where
compared
the
to
hacks come in, right?
yeah, the famous hacks that you may have heard of, or the listeners may have heard of. And I mean, it's different from building, and of course Jerb knows this really well as well, building in a closed let's say a server environment, right? It's different from building in that what I like to call a closed development environment, because what you have to worry about are like API penetrate. You have to seal up the APIs. You have penetration tests, etc. Your own logic. But this time, there's just more avenues for attack. There's a wider attack surface because the DeFi interface, the smart contract interface, is just open to so many more things.
Got it.
So it's like exponentially greater surface attack. So there's so much more to worry about aside from your own logic. There is the block time. Like you can execute transactions with it between blocks now, because Ethereum is a state machine, whereas your BPI bank account with your mobile app does not have that same attack surface, right? So then there's flash loans, if people have heard about that. On a higher level, there isn't even reliable insurance yet. So your deposits are not guaranteed up to any threshold, whatever.
Yeah.
There's insurance, but
Yeah.
it's not an automated process yet. Like there's a DAO that needs, there's an organization with tokens that needs to vote and say, oh, we'll reimburse this person from the treasury, something like that. So there's so much more that can go wrong. So do not tell your parents. Don't ask for your inheritance and lend it
Got
out.
it. Got it. I mean, that's good that we talk about some of the risks, and I think you made it very clear and just being honest, and I appreciate that. That's really cool. Now, maybe touch on like some of the upsides, right? Like, fine, this is dangerous, but why could it be worth it? Is it worth it? Like, why are you even here, Chris? Like, why are you there if you know if it's like scary out there? What do you see
Syempre,
that most
living
people don't?
dangerously daw mas exciting. So, higher yield.
Well, I mean that's part of it, right? No, but and like there's definitely like I mean it's bleeding edge tech, right? So as someone who builds things, right, we like to build things that that might have a much bigger impact. But never mind about us building things. Back to the user, the question for users. Why would people put billions of dollars in it, right? I think in they have this word called TVL, right? In DeFi, at least permissionless DeFi, right? There's enterprise DeFi coming up now, but in permissionless DeFi on Ethereum and other chains, there's like what was the latest one? $80 billion in total value locked now. And that's just in the middle of the bull run. Let's see what it is at the end of this bull run. But why are people willing to put $90 billion worth of money in this? It's because they have like astronomical annual percentage returns, right? That interest rate, let's say you get, I don't know, 0.01% from your bank. Just to provide a contrast, it's very common every day to see 100%. And that's not to say that for sure you will get 100% your capital, but at that point in time, at that block number, the rate being paid to you based on your capital, if you annualize it, is 100%.
This $90 billion, are you talking about for DeFi specifically or like the whole Ethereum?
DeFi, bro.
DeFi.
Just
so you
DeFi.
mean to tell me
just
that
DeFi.
there's $90 billion put into the system for loans to be taken out? Is that what you're referring to?
Not necessarily just that, right? It's loans, derivatives, liquidity farming, which is a DeFi concept that we can get into later. It's a whole spectrum of things across finance. So it's not just
I
that.
like seeing Albert's face.
Yeah, so you're telling me that there's $90 billion here. Is it potential or has this been loaned out to be put into?
It's there.
I know. I'm like
90 billion deposited.
as 90 billion deposited and put
for
into
various
work.
reasons. Yeah.
Like, so you meaning like people have taken out loans against these $90 billion and they're doing something with it.
Yeah, and this 90 billion, some of it could be recycled, right? Because they have this thing in blockchain called superfluid capital, meaning if I deposit, let's say $100 in Compound, what I'm gonna get now is this token that's like an IOU, right? They call it. Let's say I put 100 USDC. What I'll get from Compound is something called CUSDC. And that's like an IOU token, meaning if I take this token and I give it back to Compound, I should get my USDC back plus interest. Now, this CUSDC, this IOU wrap, they call it a wrap token. It's a yield-bearing token now, which means I can also deposit somewhere else and earn another yield off of it. So it becomes a chain, and that's why they call it carving. Yeah. Anyway, let's go. Yeah.
Yeah, that sounds really scary.
It is.
I mean, like economics-wise, right, or finance-wise, I'm trying to figure out in my mind, like how much of this is speculation or like finance derivatives and, just instruments being put on top of instruments, right? Versus like actual loans being put to productive work. Like what's your estimate here? You know what I'm saying?
Estimate that I don't think anyone has a real estimate.
Yeah.
Because I mean, you can go through the blockchain and go through every transaction bit by bit, right? But then that's really difficult because now it's even flowing through different chains. But there's no estimate there. I wouldn't be surprised if like at least half of it was just recycled capital. Um, but the main idea is that you can now stake capital, you can lend it out, and then you can take that lent out capital or the proof of that lent out capital and use it somewhere else. I
Yeah.
guess is the main point of it. So I can't answer that question, but it's going to be interesting what happens because now, like for example, if you invest in stocks, you don't get that claim token that you can now send somewhere else to some other company and then make use of their services, right? I'm going on and on here. Just let me know when to stop. But
Yeah, because it does
uh,
sound like the mortgages repackage and the mortgages repackage. It sounds
yeah,
it sounds
yeah,
pretty close to
Something
that.
we've seen
yeah,
before that
Yeah.
triggered the birth of the technology.
Yeah, which is like, are we
yeah.
doing the same thing that we kind of tried to avoid?
Yeah, and I mean there are like thresholds for like liquidation. For example, if let's say you take a loan out in the example I gave earlier, you put that $100 worth of Bitcoin and then you take $80 up to $80 worth of a loan. If that Bitcoin value drops between a certain threshold, such that your loan now is greater than the 80% that compound sets, then you lose your collateral. So it's not
Yeah.
risk-free chaining of like
Sakit,
loans or
diba? Yeah.
yeah, it does get liquidated, and then you can cascade that liquidation. So
Yeah.
yeah, there
Yeah.
are balances in there. It's not a faucet, right? Those things will stop. So yeah.
Okay. This is very interesting in the sense that currently it feels like it's a very finance person's world,
Well,
right?
DeFi at least, yeah.
Yeah. And I wonder like what are I mean, is there an effort to bring it towards like a mass
Mm.
layman person's world where we can actually take out a loan for the purpose of actually starting a business? It feels like, because I'm making an assumption here that the interest rates are pretty high, right? And meaning the interest rates are pretty high comparatively. Is this a valid assumption?
It's pretty high, I'd say.
Yeah. So,
But I mean,
so I,
yeah, we're getting into why is it high, right? And I think to answer that small question before we move forward, it's high because not a lot of people are in there yet competing for the same yields, um, versus traditional financial products where it's easily accessible to anyone.
Yeah.
They all jump in and it goes down, right? If DeFi all of a sudden got flooded by $2 trillion of capital competing for the same payouts, then obviously that would go much
mm,
lower. So the question is, how will that balance out, right? And one thing to note, as when you're looking at these yields in DeFi, some of it is, you could say, quote, they call it base annual percentage return, and that's paid in, let's say, in the stable coin that you deposit, right? That's paid in actual units of value that you're used to spending, like dollars or pesos, whatever. Another portion to that yield is just these random uh, tokens from these DeFi protocols, which does have a value because it's traded on the market. But that again, that's a lot of speculation there. So it depends. Like, will it all come crashing down? Will it all balance out and mature and get much lower? We'll see. Some balance of both. But that's sort of a distinction there, if that helps.
do you feel like DeFi will eventually take over
Mm.
traditional finance?
Well, I mean, everyone has their own opinion, and of course, Jerb has a really good opinion about that. So feel free to jump in, Jerb. But I don't think it will
Let's
take
hear both.
over.
Let's hear both.
Yeah,
But
yeah,
Chris,
yeah.
you go ahead.
Sure.
Yeah, I don't think it will take over. It will serve. It has its pros and cons, and yeah, I mean, I still have a bank account. I mean, even if I
Yeah.
spend 90% of my day either building or using DeFi, I still have a bank account where I keep my money, just because I can't use this wrap token to buy my coffee, right? At least not yet. In some way, you can actually, but anyway, I mean, it still has its uses, right? What I see is, the benefits of DeFi are, one, a permissionless, always-on liquidity network.
Mm.
So some people refer to it as on-demand liquidity if you come from like remittance or the finance space. And the benefit of that is, for example, let's say the classic example of cross-border remittance. The reason that's expensive, and is because, in my understanding, is because of every finance company or remittance company has to have like an IOU system, meaning that they have money on both sides of the ocean and then they just credit and debit, to oversimplify it. With
Yep.
on-demand liquidity or on-chain liquidity, all these stable coins or crypto flowing around, you don't have to do that. There's sufficient liquidity, and you don't have to do all this market making yourself. You can rely on third party money that's already there to sort of make the market
Mm.
for you on both sides. So it becomes cheaper, it becomes faster. You have sub-second settlement now. If you are, let's say, a remittance company trying to make costs lower for, let's say, OFWs. So that's one of the use cases, right, where traditional finance cannot effectively bridge gaps. Decentralized finance can. Now, that's just one use case, of course, but there's a whole bunch of others. But it's essentially, if you need liquidity and you can't get it all yourself, then there is permissionless liquidity, and it's just free flowing, and it's all there. It's on chain, and it's available 24/7. Is one of the things, for example, that HaloDAO recognizes and is building on. So those type of stuff, right? That's getting deep into it. There's a lot of other benefits, and of course, maybe Jerb has input there as well.
Yeah, I think what this provides is not a replacement, but more of an alternative at this point. I think, as you know, in any technology, and even with Bitcoin, right, when it started, it had a lot of. I mean, I'm not saying that DeFi has the same stigma as Bitcoin before na ginagamit for drug purchases or anonymous illegal activities, whatever, right? But in any technology, like, we're also trying to figure it out, right? And even the regulators and like even banks like Union Bank or like a lot of the financial institutions that we mentioned earlier, they're looking into this, right? And these guys are experts. They know that this is a space where they see potential. So that tells you one thing, right? Now, okay, legit to, or this can actually work, or para improve whatever things that the banks do right now that needs improvement. So to say it's a replacement at this point probably is an overstatement, but an alternative for sure. Especially to those that are into, like, if your risk investment profile is, high risk, high rewards, you want excitement, something like that. Um, Definitely something to try out, right? So, yeah, so it's like a more volatile investment option compared to stocks or something like that. Now, yeah, so that's probably like a temporary answer though. So who knows, right? In the future.
Sure, sure.
Yeah.
Talking
Yeah.
about regulations, you mentioned, I mean, we brought it up in one of the topics that we wanted to talk about here.
Hmm.
It's like, how will the US infrastructure bill
Yeah.
affect global decentralized finance or this whole crypto blockchain? Like, how do you? I actually have no idea what this U.S. infrastructure bill is. Like, what is
Yeah.
this, and how does this change things?
Yeah. Well, I'll join you there. I haven't been following it as much lately either, but um, to put it in perspective, any bill or any regulation would only affect on and off ramps of cryptocurrency, right? Or whatever blockchain service
Mm.
you use, right? Um, so if they were to regulate, for example, Binance or CoinsPH or let's say Gcash, once they offer cryptocurrency exchange services, which I think they are, at least what I see in the news,
Mm.
they can only regulate those stuff, right? Uh, if I deploy some smart contract in on Ethereum, they can't really get to that, right? They can get the funds being exchanged from fiat to crypto, but nothing much besides that. So one of if you follow crypto Twitter, what goes around a lot is all these people who are like building the foundational DeFi money Legos, as we like to call it. What they like to say and what they like to, and what they're doing is they want to make an internet that is that essentially is permissionless and peer-to-peer, and they're making it such that even if regulators wanted to control it, they cannot control it just because of how the technology works. And the core of that is your public-private key pair. If you're familiar with basic cryptography,
Yeah.
if you sign a message or an instruction, that came from your wallet, and no one else can change that, and that can be executed on chain according to some logic. No regulator can affect that. But of course,
Yeah.
that's coming from my. I like just building things without people trying to stop me, and I don't know why I was in fintech because of that, but I like the
No, it's
idea that I
perfect
can.
actually, bro. Kasi
Yeah,
it's usually like build it and ask like don't ask for permission. Just ask for
Yeah.
forgiveness later, right? Yeah.
Exactly. Yeah, but of course, as a company that has to be responsible, handling people's funds, we of course, we have to be regulatory compliant, right? It doesn't mean just because we're some foundation building a smart contract system doesn't mean you can't have safeguards there. Of course, you
Mm,
have to use the pros, and still be compliant as much as
mm.
is specified by any regulator. But we're not really talking about the infrastructure bill in specific now, but um, it's sort of just being responsible, right? To the extent that you can be.
Yeah.
We're getting way off topic now, but yeah,
No,
No,
no
it's still
worries.
related. Actually,
yeah,
if
yeah.
I can
When go ahead,
share
Jerb.
my thoughts here, I think because we live in different regulatory regimes, right? And like even in startups, right? People usually, like not people, but companies move to certain places because regulations are, better in that area, right? Like they call it parang regulatory shopping ba or something. Basta parang whatever regime would work well for your company, you stay there, right? In the same way here is that while what Chris mentioned is correct, no, in a sense that the technology makes it really hard for the governments or regulators or ruling bodies in general, right, to kind of regulate this because you live in, let's say, put it into perspective, let's say the Philippines or in the US, kasi US in question, you have to pay taxes, right? And because if like push comes to shove, siguro like if they criminalize na you don't report your taxes and people actually like know that you're earning money from crypto, so yun. So that's one side of the extreme that kind of provides like a pull if there's like a push and pull, di ba? Parang game. The other one is what Chris mentioned. Sobrang okay yun actually. So if you're a company that actually, does DeFi, you have customers, right? And naturally people like customers would be worried about these regulations and not, breaking any rules. That's one. Second is legit ba si HaloDAO or let's say any other DeFi company, for example, um, and if they're legit, then they should follow the rules, right? So as a company or as a founder, you own the company, you kind of have to, there's a balance. It's like a seesaw kind of thing na yun na nga, no? And push comes to shove, the extreme is that you probably would move over to a different regulatory regime, no? Like for example, like there are countries that are more accepting in about these things, right? So yeah, baka ganun ang mangyayari. But yeah, in general, I probably don't think it can affect a lot also until that happens na hey, it's tax evasion. Parang ganun. Yeah, yeah, yeah.
Yeah. And that being said, right, just because your money's on the blockchain doesn't mean it can't be traced, right? Actually, it's the opposite. It's
True.
absolutely traceable, right? I mean,
Yeah.
that famous hack, I think, was the biggest DeFi hack in history so far. So what was that, $600 million that was stolen from the Poly network, was it?
Contract. Mm.
Yeah, and yeah, so that the you could say hacker. I mean, it depends on what your viewpoint is there. I don't feel like it was a hack completely, but
Exploit.
an exploit. He got $600 million, but he Tether froze his stablecoins because Tether is essentially issued stablecoin, right? More on that later on if you want, but that guy froze Tether froze some of those funds. Just people on crypto Twitter everywhere just traced the addresses. Their
Yeah.
exchanges started looking at it, and the guy ended up returning a bunch of the money. I think part of the reason, maybe I don't know, is that he or she thought he couldn't really spend it anyway. So right, so it doesn't mean that permissionless systems are completely against observation or regulation. It's actually opposite. It's actually a lot easier in some ways.
Yeah. 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 How's
I'll
this
be honest.
percolating in your brain, Bert?
Yeah, I'll be honest. I'm a little bit, maybe I just fell off the hype train, right? Like early in this episode, I was like, oh my gosh, DeFi is gonna take over the world. This is the future. And then Chris and Jerb here give me like, this is not probably gonna be like the future replacement. This is just gonna be like an alternative. And I'm like,
Promising
what's
though.
exciting what's exciting about this thing, right? And I know you talk about decent like permissionless. I get that. Um, people, it's an alternative crypto place. Paint me a picture of a very ideal scenario. Put me back in the hype train. If
Of utopia.
everything goes like according to plan, right? With nothing messes out, or like ideal scenario, what could be the happening here, right? What could this be? Is there anything here that could be promising where we could just say like, maybe this should be the more dominant way we do finance instead of traditional?
That's a tough question. um, I don't know. At the in a very concrete way, I think it will just mean that, for example, current young generations. So what comes after Gen Z? I don't know. I don't know the letters anymore. But let's say people who are like 15 to like 20 years old now. I think a lot of them won't be making bank accounts anymore, unless of course their company has to make a salary account for them or whatever. But a lot of these
Mm.
people now, they just have crypto accounts. Like if you've been paying attention to the play to earn economy, Axie Infinity, a lot of these people are kids and they're just earning 100,000 pesos a month equivalent,
Mm.
and then they just take that money, they just stake it in a compound finance equivalent, and they earn 10-20% per year, right? And then they just connect it to their crypto debit card, and then they just spend from there. The idea that
Crypto debit card. You mean you can
oh, okay,
spend like
yeah. So there are a lot of like crypto debit cards now that are Visa and Mastercard cards.
Yeah. Yeah.
So you can
So
just swipe
combo
it
siya, Bert.
anytime.
Combo siya ng like the regular finance, right? Like it's a real debit card talaga. It's a Visa card that you can use in POS, online and offline. Yeah. Go.
Yeah, exactly. Yeah. So in that scenario, at least to the user, they don't even go through a bank anymore. It still goes through a financial institution, right? But then, for example, in my case, I have a crypto debit card, a Visa card that was not issued from anywhere in the Philippines,
you
and
have one right now?
yeah.
Okay.
Well, I won't flash it
Let's-
here, but yeah,
Yeah,
I
don't
have it.
Yeah.
But yeah, I mean that for example, like I use it to shop on Lazada, whatever. I earn in like, let's say I earn from a crypto protocol, it goes straight to my debit card. I just swipe there. I didn't even go through a Philippine bank in that case, right? So I think the fact that there's just the point being there's just much lower barriers now, and
Yeah.
yeah.
like my 15-year-old brother has a crypto account with a chunk of cash
Yeah.
that I pay him for doing
Did he have to do
whatever.
like a KYC process though?
No, right? He just spun up a MetaMask and then yeah, he's done. So he has a crypto account with a bunch of Ethereum in it, and he doesn't have a bank account. So I think more and more this low barrier situation is going to make it so that people will skip banks
Yeah.
for most, not most, but a good number of use cases, or whatever, and then
True.
they'll go straight to that, right? And because they go straight to that, products and services will be built around these permissionless wallets. And then there's just these flows will just go straight to these permissionless products and services that they're accustomed to because they're always on their laptops, they're always on their phones, and then these things are just downloadable right away, right? So I think that's what's going to happen, right? So people are going to work, people are going to earn, people are going to play straight on permissionless networks like Ethereum just because it's so accessible. Sure, if they work for a company, then you'll probably have a bank account to receive their salaries, but it'll shift, right? So if
Mm.
that's getting at the question, I think that's sort of what we're working towards. If people have heard of like the metaverse, whatever,
That was
we're
that was a word Albert learned in the last
Last
episode.
week.
oh, okay, that's it, yeah. So we're working towards Ready Player One, right? Where you live, work, and play in these shared worlds that are not necessarily gate kept by anyone, where anyone can access it. So sure, you need a whole ton of capital to make a whole ton of money. That hasn't changed, but the barriers to participation are much lower because, as Jerb mentioned before, transaction fees will be lower. You don't have to have minimum, balance in your bank account. You don't have to do all the same KYC. It's just all internet native, really. So
Yeah. Yeah. It's like the people's infrastructure, right? In effect.
Got it.
like
Not owned
BitTorrent.
by anybody. Yeah.
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 So now that I understand
Full
both of
circle
you,
na.
Yeah.
what's the use case that HaloDAO are you thinking of doing, like addressing first and foremost?
Yeah, so at least as I like to describe it, our product pillars, as I usually explain it, are we allow anyone to permissionally shop, spend, and save anywhere in the world, no matter where you are. That means if you wanted to order a Grab Express, Grab Food, whatever, you can do it in the Philippines from Singapore. Uh, so that will need some explanation, but we're just going to
Yeah.
make it. So it's essentially commerce and finance. If you want to earn money, you want to spend your money, you want to buy things with your money, you can do it anywhere in the world. That's what we're going for.
Yeah.
When you say
Actually,
money, are you referring to like tokens?
In whatever form it might be,
Okay.
whether it's like digital collectibles, penguins you buy in the blockchain, and then you, you take a loan against that penguin and then spend your stable coins in your crypto debit card, whatever form it takes, right? So yeah, stable coins to start with, since
yeah,
that's the
yeah,
most
for sure.
relatable to one. So
Very interesting. I mean, is this already out or are you in building mode?
we're in heavy building mode. I think we just finished our seed round. What was it, March? We're currently in the liquidity mining phase, meaning we're building up the liquidity to enable these permissionless networks, like I mentioned. So we're doing that now. So you can actually get really good yields off your stable coins now if you go to halodao.com.
Go,
What's
guys.
coming in? Yeah. If you what's coming next are the spending and saving parts that I mentioned. So we have a heavy roadmap coming, but if you want to learn more, join our channels. It's all on halodao.com. Feel free to join. We have an active community on Discord, etc. And some initial documentation you'll see there. So yeah. Oh,
This is
there,
really
great.
cool, Chris.
Yeah.
This is really cool. Yeah, so everyone out there, feel free to check out halodao.com. I mean, it sounds very exciting. It sounds like, I like the term heavy building mode, like just really like getting into it.
Meaning niya
Makes
walang
me miss.
tulog.
Yeah. So thank you so much for making time for this. Yeah,
Yeah.
thanks for sharing that, Chris. I mean, best of luck to you and your team, man. This sounds very, very exciting.
Thanks. Yeah, and I don't know why I didn't know about your channel sooner, guys. It looks really cool and well put together. I'll be watching more of your episodes now that I've been on it.
Yay! Gain one more fan.
Yeah, all you had to do was
Cool.
invite me on.
Cool.
Thanks, Chris. Thank you so much. So, guys, everyone watching, that about wraps up the episode, I guess. So again, if you guys have any questions though that you were too shy to ask live, send it to us on the page, and then we'll reach out to Chris. If you need help with HaloDAO or all of the things that he mentioned earlier, I don't know, Chris. I'm volunteering you here. So if you're
Oh, yeah,
willing, so go
absolutely.
ahead.
Yeah,
Cool.
absolutely. Yeah.
There you go. Cool. I
Right.
think that's it, no, Britt?
Yeah, thank you everyone for joining us. Next, Jerb, do we have an announcement for next episode, or we will announce it on our page very, very
We'll
soon?
announce it on our page.
Okay, so stay tuned. We hope to see you next week. Thank you very much for joining us, everybody. Thank you, Chris, for joining us, and
Thank you,
until
Chris.
next Saturday.
Thanks,
Appreciate
Albert.
it.
Thanks, Drew. All right.
All right.
Thank you. See you guys
Bye.
next week. Bye-bye.
What I've seen that hinders a lot of people in general is they believe that doing their job well actually gets them promoted.
So how would you demystify AI for a 10-year-old?
It's actually harder to explain AI to an older person. Hi, welcome to CTOsDiscuss.
So you want to work in big tech companies like Google and Facebook, or create your own startup like Airbnb and Instagram? OmniQuotient is here to help. OmniQuotient is an online learning platform where you can learn something new from prominent developers every day while creating meaningful connections with them. Just go to omniquotient.com. Follow the topics that you want to learn and the developers you want to learn from. Share your tips and tricks in coding and interact with other developers. Join the OmniQuotient community today.